Well, okay, it's time for the TikTok Takedown. That's where we play a social video that purports to give financial advice, and we try to determine whether it's legit or not. Good advice, not such good advice. We peel back the onion for you. So let's cue this week's version.
If you have to own stocks, own them outside America. Don't own U.S. stocks.
No.
That's a nice, simple strategy that you can act on.
Why?
They're much cheaper. And since the beginning of last year, they have handsomely outperformed the U.S.
Foreign stocks.
Foreign stocks of emerging countries, of European countries, Japan, Canada, Australia, and so on. You can find good broad indices, kind of the world ex-U.S.
Okay.
Or emerging markets. And
invest outside of America.
yeah, I'm sure they'll muddle through okay over the next 10 or 20 years. And I am not confident that the U.S. will do that.
You're not confident in which part? That the US
I'm not confident that U.S. equities will be intact in 5 years, 10 years.
So a US equity is a US stock.
Yes,
Why aren't you confident that they'll be intact in 5 or 10 years?
because they're so badly overpriced today.
Oh, this fries my onions, man. Ooh, I want to tell you something. Not confident that U.S. stocks are going to be around in 5 or 10 years. What an outrageous thing to say.
I guess the U.S. market is going to,
Go to zero.
Go bust.
Yeah, going to go to zero. What about 100 years of data where U.S. stocks grow by 10% a year? Billionaire. Where'd you get his billions?
I mean, yeah, go invest in the foreign stock market, sure, but don't ignore the U.S. stock market. Are you kidding me? That should be the bulk of your investment.
By the way, do you like his time horizon? From the
It's
beginning of
year.
last year, they've outperformed. How about we look at the last 50 years? And the U.S. has trounced the rest of the world. And it doesn't mean that you should ignore the rest of the world,
No.
but this is absolutely insane.
Dangerous advice. If someone's actually watching this and God forbid, reallocating their portfolio based on what he just said.
Gillionaires, listeners, viewers, we love you so much, and we love your comments, even though I'm so thin-skinned that I don't read them myself. But thankfully, people curate this. We did a TikTok takedown, Mark, that was really interesting, where we had this guy who was giving advice, which was the U.S. market's about to crash. Everyone should invest in international markets. You and I kind of were negative on that advice. This guy is Jeremy Grantham. I think we might have edited out the fact that I actually know who this guy is, and he has a very long history. But I'm just going to read 3 of the comments that are representative of a lot of the comments we got on Instagram. Follow us on Instagram. Okay, here we go. What about 100 years of data? Everyone seems to miss the disclaimer at the bottom of every prospectus. Past performance is no guarantee of future results. If we keep going on the way we are, we will collapse our system. You do not have to believe it is happening, but do not complain when or if it does.
That's a comment on Instagram?
That's a comment. Let me give you number 2. The hint remains valid. It is not wise to hang up all your life savings on one single country's economy. I saw this interview a while ago, and I acted on it with no regret. Okay. 3rd, we have videos of people like this in 2007 bloviating about the strength of the housing market as well. You don't know as much as you think you do.
Oh, wow. So all 3 of these.
Very negative about us. Okay, can I just talk? I want to talk a little bit about this. So, first of all, I love that someone's saying past performance is no indication of future results.
True.
Totally true. And, Grantham is a smart guy. He's been running this GMO for a long time. He's a rich guy. He's also been wrong for a long time. So Grantham has been actually sort of for about 10 or 12 years been saying the bottom's about to fall out. In 2023, his outlook letter, this is January 23. And here's what he wrote in 2023. After a timeout back to the meat grinder, there's going to be a 50% crash. Then he said we're in a super bubble. It's on the verge of popping. He put a 70% probability on a crash, matching the patterns of 1929, 2000, and 2021. He did predict the dot-com and housing market busts of 2000 and 2008. Okay? Guess what, Jeremy Grantham, and also all you commenters? I also predicted the 2000 bubble. And let me tell you what happened to me. I was managing money for a little financial advisory firm, and I was the chief investment officer. And so to be clear, In 1999, which may have been the worst year of my entire career, I started pulling out of a lot of technology holdings because I said, this is not sustainable. This is crazy. And it was early, and I lost a ton of business. People are like, I made 84% in my mutual fund this year, and your crappy portfolio, Jill, made like 25%. And so I got fired a lot in 1999, a lot. Then in 2000, the bubble burst. And then I got all this notoriety. People were like, she predicted that this was going to crash. This is how I first started going on television, Mark. So I got out early in 99. I did miss the bottom. When did I get back in, do you think?
When did you get back in? I don't know. Early 2000s?
So I missed a lot of the turn back up. Okay. And so here is why I reacted to that video, I think, is that I have been in the place where I did get one part of the market timing decision correct. And I screwed up the second part of it. Now, I didn't lose a ton of clients because of missing the back end, because people were just so happy they missed the worst of it. But you and I know that we can look at, like our friend Ben Carlson. He has all the data about, like, if you miss the worst days,
Like the 5 best days,
if you miss the 5
days.
worst days and the 5 best days, like what happens? And what we actually know is something kind of fascinating, which is staying invested and maybe not having all of your money in US or all of your money in one country or all of your money in Bitcoin or all of your money in gold. You don't need to do that. But if you do stay invested and stick with your plan, it actually works. So, if you are that person who said, I acted on this advice and I got out of the US market, you might be right in the short term. When are you going to get back in?
As we always like to say, it's time in the market, not time in the market. Is that right?
Yeah, exactly.
It's impossible. It's so incredibly hard to execute.
And, are we going to put that pressure on ourselves to try to pick when to get in and out of markets? And I even think about like that experience in 2000 to 2002 for me, which is like you get all this adulation because, oh, you're all right. And nobody really holds you accountable for when you don't get back in. And so the cool thing is about looking back in time and saying, yeah, you're right, past performance is no indication, but we can look back at crashes, what happened, we can look at recoveries, we can look at how portfolios perform, and it won't perform exactly the same way, but I like having that data as a basis for why we would try to move forward.
I like 100 years.
So Instagram commenters, TikTok commenters, YouTube commenters, keep them coming.